Welcome back. Now let's look at one sector that has great potentials to actually bring about growth and good opportunity for investors. It is the insurance sector. Now, despite these opportunities, this sector presents 10 years after consolidation, Nigeria's insurance penetration rate is set to remain very low. I'm being joined now in the studio by the Chief Executive Officer, Consolidated Hallmark Insurance PLC, Edi Efekoha. Thank you very much for joining us on the program.
Thank you very much. Good morning.
Right. Consolidated Hallmark is one of the insurance companies born by the consolidation done that was 10 years ago. Now, that brought about Consolidated Hallmark is about 3 companies coming together.
Correct.
Right. 10 years down the line. Speak to your experience, the gains and drawbacks of this consolidation.
Thank you very much. 10 years ago, Consolidated Hallmark came into the business as a product of the merger. 3 companies actually came together. Hallmark Assurance, Nigerian General, and Consolidated Risk Insurance. This was their own attempt to meet the recapitalization requirement of the National Insurance Commission, which took place, announced in 2005, but got completed in 2007. Some of the operators at that time raised enough capital without necessarily combining their companies. But for us, we felt that beyond raising capital, we needed to raise size, our portfolio of businesses, and then, of course, the network that each of our companies have built over the time. And so we combined our operations and launched out in March of 2007. Today, 2017, we are 10 years down the road. We are very delighted that we did what we did, because prior to that merger, we were running a gross profit income, gross premium income of below 1 billion. But today we are generating over 6 billion by way of gross premium income. And our profitability has been greatly enhanced. We are operating for more location than we used to. And today we have equally rewarded our investors over this past 10 years, because we now have a management team and other staff that are well trained and can be retrained in course of the 10 years. So I will tell you that it's been plus for everybody, all stakeholders. For the government as well, we've met our tax obligations and equally our levies and all of that to our regulators. So I think that given the opportunity, I think consolidation will continue to be the way to go for this industry, because you are bringing all the good sides of all the operators together in any merger arrangement. I think that would be mine.
So are you one of those in support that there should be another round of consolidation and recapitalization in the industry?
Yes and no. I would not favor a regulatory induced recapitalization because it has its own challenges, because you are compelled to meet it within a given time line. But if you have to do so in order to meet your corporate objective, then of course I think that should be encouraged. In the first instance, why recapitalization and why consolidation? I think that is a question we must answer before we go too deep into the discussion. And I think that you recapitalize in order to enhance your capacity. Insurance business is that of assuming the risk of others. And if you must assume the risk of others, then of course the premium you collect is a fraction of the financial valuation of the risk you are underwriting. And what it does mean is that you need that depth financially to meet those risks if they do crystallize in terms of claims. And so you continue to require capital. Yes, sometimes we will say insurance is a pool of funds, yes, out of which very few withdraw from it which by way of claims. But sometimes you could find that you could have more claims than the premiums that you have actually generated. So that's when you need your capital to support whatever you're doing. So I would say that yes, under the current regime, regulatory-wise, and for by way of regulatory priorities coming from the primary regulator of the industry, there is the issue of capital verification currently, and there's the issue of risk-based supervision, which will lead us to risk-based capital. These are efforts to further raise capital, but essentially it is tied to your wish as a company to wanting to do certain business. What the regulator is saying under the risk-based capital, for instance, will be that if you want to underwrite the business of Keke and Pep, you only require to raise capital that meets that. But if you want to underwrite risk emanating from the oil and gas or aviation, then of course you do not require the same capital as those who will do Keke and Pep. So your capital obviously will be higher. So it's a choice, it's a decision that each corporate entity or operator will need to make in this circumstance.